So, hello everyone. Today we are going to discuss another penny stock, which is named Axita Cotton Limited. The company is, if we look at the brief introduction about the company, so company is mainly the manufacturer and exporter of cotton bales and cotton yarn. If we look at the uh, revenue breakup, so majority of the revenue comes from its sales of manufacturing cotton products. If we look at the company other factors, so the company is mostly having a business located in Gujarat, which is having which is closer to the various I would say the agricultural areas that is rich in cotton production, and that is the why that helps the company to tap the cotton market and the cotton inventory in cheaper and the better possible price as we compare with the other peers. However, look if we look at some number introductions, so the market cap is around 600 crores, which is a pure penny stock or small cap company. However, looking to the current price, which is stood at 22 rupees per share, the PE is around 28.3. If we look at the PE is around 28 from 3, but the PE of the normally textile products are around 28.28. So PE is at what the industry PE. PE is same with the industry PE, aligning with the industry PE. If we look at the book value, so book value is around 2.50, which is lesser than what it was priced today. If you look at the dividend, so a penny stock like this is paying a dividend, that would be a tick factor or the plus factor of this company. If we look at the ROCE, so ROCE is more than 35%, and ROE as well. That would be something which we have to uh, put an eye upon, because a company like this, which is having a market price of 22 rupees with a market cap of 600 crores and giving an ROCE and ROE of more than 30%, so that is something which we always appreciate from the company like this, and never expect as the stock which is having this much amount of ROC and ROE to be traded at this price. If you look at the financial data of last 5 years, so company reached its peak at rupees 55 per share, and currently trading at around 23 rupees per share, assuming that the bonus factor and all those buyback factor has been adjusted in their pricing, and the company is trading at reach its peak as 55. So there is a huge potential that the company is going to give, there is an optimistic view. If we can look at there can be an upside of approximately 100% if we look at its peak and the current price at which it is trailing. Now we look at the other factors like quarterly results. So the company is having a fabulous sales growth numbers, where sales are around 221 crores. If we look at the quarterly sales in the March 23 quarter, so that would stood at around 122 crores, which says that the company is having around 100% of sales growth in quarter on quarter basis, as we'll compare it with the previous quarter in the same financial previous financial years. However, the operating profit margin is an issue, and the company is having an mere operating profit margin of 3%. But the net profit to a company has never been a loss-making company, and company has always posted a consistent profit returns. Looking at the other factors, like company in March 23, the sales are around 553 crores, which has been doubled, and 100% growth is seen with the March 24, around 1100 crores of sales, with the profitability seen as 17 crores in March 23 and 20 crores in March 24. But if we look at the various factors, why the if the sales is increasing at this pace, why what is the problem with the profitability? That profitability has not increased that much because of the I would say the profitability margin in March 23, that they stood at around 3%, but now 2%, so 50%. And the cost of the product, or the profit margin, operating profit margin, has decreased by 50%. And I think that would be the reason why the company is struggling, or it's not struggling. I would say that the company is not making the profit as it was it in since in their sales growth, or as parallel to their sales growth. Now, looking to the sales growth, obviously they have given a fabulous return of 40% around in 5 years, and 3 years 20%. If we look at the profit growth. So the profit growth is also at double digit numbers. Stock price has also given a double digit return to investors. ROE is obviously more than 30%. Looking to the equity capital, so first we look the corporate actions. Like corporate actions shows what are the actions that are taken by the company related to share. So the company has raised a bonus issue of around 1:3 shares. So one who is having 3 share, they get one bonus issue, and that is the reason why the share capital has increased from 20 crores to 26 crore rupees. And it seems, and that is the reason why that there is a dip in the, and not dip, there is a minimal growth in the reserve, because the amount of 6 crores has been moved from this 33 crores to 26 crore rupees, and 6 crores has been uplifted to the equity capital. So if we look at the other factors, like company is very famous in giving bonus issues companies, so it shows that company thinks about their investor as well. If we if you see the stock like this, which is such a penny stock, and giving a buyback offer of I would say 9 lakh shares, and if we look at the pricing, so the pricing is around 56 rupees per share. So we can say that the 56 rupees, if we discount it with the currently a bonus issue, so it stood at around 42 rupees per share. And it simply says that the company is I would say, Mm, this is the I would say the base price 42 would be the price at which we should prefer to buy, or we can prefer to buy, because company has already paid 42 rupees after having an adjustment of bonus factor. So 42 rupees per share should be the price at which company should mm, play right now. But because of various factors, and obviously as we have know that the textiles sector is hitting hard, so that would be an issue why the price are not up to that mark. So if we look at the cash from operating activity, so the cash from operating activity is yet negative. But the catch there is that the receivables are around 6 crores positive. That would be a good factor. It means that the company is not showing fictitious profits or fictitious fictitious sales. Actually, the company is receiving more from its receivables. If we look at also, if we see that the receivables are at their lowest point, I will elaborate this again, that the company in last 5 years, from 40 crores, 71, 73, 44, the company is having lowest receivables in past 5 years, and yet maintaining that sales growth as well, which would be one of the mind-blowing factor, or I would say that would be something which is differentiating factor for this penny stock, and that would be again a tick mark for this company. Cash and cash equivalents is good and decent enough. More than 5 crores would be decent enough for a small cap like this. If we look at the inventory, so it shows that yeah, there is a negative operating cash flow, but that is being gone to the inventory payables, because company is consistently piling up its inventory, and the inventory stood at I would say that the inventory stood at around if we look at 19 crore from 6 crore on 4 crore. So companies uh, increases inventory of more than 15 crore rupees, and that is clearly visible, because the cash flow is also getting off from the uh, company, because they have purchased a huge amount of inventory or pile up the inventory, and the company has reduced its trade payables as well of 10 crore rupees, which shows that company is a company wants to be liability free in sooner or later time. We look at the other factors, so the company is having an I would say that company has in investing activity, the company has not done anything significant, and but the company has this interest of more than a crore. That would be something which shows that the company is also getting some revenue from other sources as well. If we look at the financing activity, so the financing activity, obviously the company has raised borrowings of 19 crore short terms, as we have seen in the balance sheet as well. But the interest payments are less than a crore, so that would not be an issue for a company having more than 5 crores of cash in bank. So company can easily finance or pay off its interest and the financial commitments. Now, if we look at the other things, like I would say. The ratios, that the ratio would be around 26 rupees working capital days, and cash conversion cycle is 18 days. That is fabulous. I have never seen that any, in particular, any company that is engaged in textile sector, which is having a cash conversion cycle of 18 days. I have never seen any stock which is below 60 days, but this shows 18 days, which is again a tick mark for the company. However, if we're looking at the shareholding pattern, so the promoter has reduced their shareholding from around 12 to 13% in past 4 or 5 years. But that would not be an issue if the unless the stake goes as down as 40% or less than that, or the promoter consistently reducing their stake in last 4 or 5 years from now onwards, or something. But the catch here we would like to focus on is that the FII has reduced their stake from 10% or 12% to 0.47%. I don't know why they have reduced the stake. Maybe that this sector is not lucrative, so that is the one of the reason, or any other reasons as well, which we do not know much. So I I would say that that is something which is a negative mark for company, because in a penny stock, if FII are invested heavily, so that shows that shows the retail investors are confidence. Or if FII DII has invested in any stock, it means they have good tools and screener to view the any particular stock, and in if in their screen or their tools, if that particular stock is suited or suitable for them, then only they invest in the stock. And if they have reduced their stake or holdings in the company, so this is not an only profit booking scenario, but that would be an reason, point to think about that why they have reduced their stake. However, the company is having various positives and various positives, few negatives as well. As we all know that a penny stock cannot be good in every factors. It is very less chance that any penny stock which would be good in each and every factor. That is why they are trading at around discounted price, or trading at the price which is less than what their peers, or I would say that mid cap or large cap stock are trading at. So with this, I conclude that the stock has proven a good historical records, and I think that the company may have a good sustainable future in long run as well. But this is an financial analysis on the stock, and I think that this should not be considered as an not be taken as any financial or portfolio advice. However, I think that before investing into any stock, we should you should consult with your financial advisor. And this is from my side. I hope you all enjoy this video and find it informative. Thanks for watching.